What if you could own the S&P 500 and collect over 10% in annual income at the same time? That's exactly what SPYI promises. But is it too good to be true? Or is this one of the smartest income ETFs ever built? SPYI is the NEOS S&P 500 High Income ETF, managed by NEOS Investments. It launched in 2022 and has quickly become one of the most talked about income ETFs on the market. The goal is simple: give investors exposure to the S&P 500 while generating a high monthly income, well above what you'd get from a traditional dividend ETF. As of 2026, SPYI is distributing over 10% annually, paid out every single month. SPYI uses a strategy called a covered call overlay. The fund holds S&P 500 exposure. At the same time, it sells call options on the index, essentially selling the right for someone else to buy the index at a higher price. In exchange for selling that right, SPYI collects a premium. That premium gets distributed to shareholders as income. But here's what makes SPYI different from other covered call ETFs like XYLD or QYLD. NEOS uses a tax-efficient approach. They focus on index options, which qualify for Section 1246 treatment. That means 60% of the gains are taxed at long-term capital gains rates, even if you hold for just one day. That's a big deal for taxable accounts. SPYI targets monthly distributions. In recent months, those distributions have been running between 85 cents and $1 per share per month, which translates to roughly 10 to 13% annualized, depending on market volatility. Higher volatility means higher option premiums, which means more income for SPYI shareholders. The expense ratio is 0.68%, competitive for an actively managed income strategy. Here's what you're giving up: upside capture. When the S&P 500 surges, SPYI won't keep pace. The covered calls cap some of the upside. In exchange, you're collecting consistent monthly income regardless of what the market does. This is fundamentally different from VOO or SPY. You're not trying to maximize long-term growth. You're generating cash flow from your portfolio now. SPYI makes sense for income-focused investors, retirees, people in drawdown, or anyone who wants their portfolio to generate real monthly cash without having to sell shares. It also works well in a volatile market, where option premiums are elevated and monthly distributions are at their highest. It is not a replacement for a core S&P 500 fund if your goal is long-term wealth accumulation. SPYI is one of the most thoughtfully constructed income ETFs available. The tax-efficient structure, monthly distributions, and S&P 500 exposure make it genuinely compelling for income investors. If you want your money to work harder every month, and you understand the upside cap trade-off, SPYI deserves a serious look. Subscribe for more no-fluff ETF breakdowns. See you in the next one.